What's going on, everyone? So, like the last video, I'm doing another live trade session where I recorded myself as I'm talking to you all, talking out the markets, how I'm reading it, using ICT concepts. Except today, it was a little bit different. I had my 15-year-old son sitting in with me, so that's exciting. He told me he now wants to learn how to trade, so he's just kind of popping in my office here and there, jumping in, learning some terminology, learning a few things, watching the charts move. So I was kind of explaining some things to him and also explaining some things to you all as if I'm talking out loud, reading the market, pretty much how I normally talk to myself too. So hope you enjoyed this one. This is a trade review or the live trade session for August 28th, Wednesday, 2024. So I hope you enjoy and pick up a few nuggets from it. If so, hit that like button, give me a thumbs up, and don't forget to subscribe. As always, trade well. So like right now, first thing I'm going to do, I'm going to go to the daily chart, and this is today, so the day before. And I don't expect you to remember all this, of course, the first day. So I go the day before and I mark so this is called the body, right? And then the line that goes up and the line that goes down here, those are called wicks. So this is the body and this is the wick. The wick, that means at one point the price went up because see, it's attached to a price right here, 19,620. This line that goes across, you can't really see it right now. Small dotted line tells you where the price is, and that's what moves the bar up and down. So at one point, the price went all the way up there, and at one point, the price has been all the way down there. That's what the wicks are called, or that's what the wicks are. So I'll mark from the daily chart the day before. I start off by marking the lowest point. Wait, what? Oh, the low, and then the highest point of the wick. So it marks out yesterday high, yesterday low. And then I go back, and this is called the new day opening gap. I mark this. So before I start trading, I got to mark these things. So I'm going to have to explain some of this before or later, but this is yesterday. So there's a gap. It's called between 16:45, so that's 5 p.m. And then when the market opens to 1800, there's a 1 hour gap right here. So I have to mark that too. I'll show you all this later in more detail. But so open, closed here, 19,636. I'll have to show you all this in more detail, how to see all this, but all right, I'm gonna go to the 15-minute. So just keep in mind, there's gonna be some things that you don't understand, of course. So look, we look at 7 o'clock, right? All right, so do we have any? It's 9:15. We don't have any clean, smooth areas. Price actually just this low just took that low. And it just wicked up through the new day opening gap for the day. So it took a high and took a low. So if I go, well, let me drop down to our 5-minute. Not really seeing any smooth. Now it might be creating equal highs, but after 7 a.m., there's no smoothness. Right? But, I see this gap here that we just went into. There's no real smoothness. Let's go to the 1 minute. Okay, we just got to wait because there's no real smoothness. We go back to the 15-minute. I do see up here, if you look back further, we have these equal highs up here. Equal highs, and then up here. So this is going to be our buy side liquidity. This is where I'm expecting price to go. Up here. Because we had these equal highs. See, this wick did not get as high as that one. Came all the way up here, made relatively equal highs, and it did not get that high. See, if I put a high right here, boom, you see the gap? It didn't make it up there. So that's the only real thing I'm seeing. And we have an inversion, big inversion fair value gap right here. Price just went into it. There's no real gaps down. We got an inversion right here. So what I want to see is price come up and close above this one. We have this one here too. Then we have, okay, we have this one back here. What? I'm on the 15 minute. This gap right here. This is the one that we're looking at. Because see, there's a reason why the bars always stop. There's going to be a reason. See, I'm going to have to explain this in better detail to you. But see, we came off that one there. 5 minute. Now we have. Now let me mark my London session. 505. 155. London low. See, the thing is, Nico, I got to explain all this first. Okay, the London high is where I have my buy side liquidity. So that's going to be London high also. So right now, let's see where price draws to. We got a lot of new day opening gaps down here, so it might draw down there. We have some above too, so I think we have buy side liquidity up there is what I'm looking at. So we might have a run down and then up. Let's see if there's anything on the higher time frames. We have a gap here. We have a gap here to go down. It's too clean up there. I think price goes up. We have this 1 hour gap, but I don't think it holds. So we might draw down to here though. These new opening gaps. We just got to see where we draw down to, but I think we're going to go. I'm looking for a long today. A lot of trading is just analyzing and sitting and waiting. Now we do have a gap right here too. And this is, let's see if we have an opening range gap. We do have an opening range gap up. So yeah, right now, I guess you're probably not going to be taking too many notes. Because you got to learn the terminology mainly. See, right now, look how busy my chart looks. Like there's a lot of stuff going on now. Get rid of this. I think this is going to be our manipulation down. Where could we draw to? I mean, we really could draw down to this area. But I think this is our manipulation leg right here. Got a volume imbalance right here. So see it go through there. We got a little gap here. So what I would like to see is it come through this volume imbalance, invert this gap. Right there. Make that an inversion fair value gap right there. All right, so we took this swing here. We took that. It traded through this volume imbalance that I mentioned right up to this fair value gap. Now let's see what it wants to do. I want to see it get inverted, but it might pull up here and continue down. We measure the high and the low of this dealing range. That was in a premium. So I just don't have any reason to go short. So, I mean, I just don't really, I don't have any reason to go short. So I'm not going to go short. Like the only reason why it could go short is to draw down to that daily gap. And if it runs down there, then I probably just won't get a trade today. But I mean, the only thing that I could really see reason going short is to come down here to that 1 hour gap that I showed. And this, but these are old from August 16th, new day opening gap. You do have this one from the 27th. So a couple days ago, yesterday. What's today? Yeah, from yesterday. So it could run down here to get that. We do have a gap there as well. But, I mean, it's already filled through that gap and everything. So, yeah, I'm looking for a long. If I don't get a long, then I don't see anything for me short. And there's no news today either, so there's no like driver. See, this could have been a short right here, 625. But even then, look how big this move it looks, but it really is not. That's 25. That's only like 30 points. So just gotta wait and see, let it shape out a little bit. It's still only 9:44, so it's early. So yeah, you're gonna have to learn a lot of the terminology. That's gonna be the thing right now, because you don't probably have any idea what I'm talking about. Now that would have been a nice short right here, if you believe that it was going to draw down in that area. But I really don't have any reason. Like I don't have, like, I mean, there was a reason, but I didn't have anything else. You know, like it wasn't a strong reason that price could go down. Like we have that 1 hour gap, but, and then you do, I mean, we are up here. So I guess, you know, the reason would be for it to go down to these. But look at this. Look at where it went to now. Now it's engineering some sell side liquidity right here. So there's actually a volume imbalance right here as well on this 1 hour chart. So price could reach down into this area. It's just not something I really feel confident in, you know, so. But now look what we have though. We have relatively equal highs up here. Price is creating relatively equal lows down here. So if it creates this and engineers sell side liquidity, it could run up and take this out and then come down if it's going to go down through that. Or, you know, it might just keep going down and then come up some other time. But, and then you can see here too, there's a huge 1 hour gap right here as well. So it left this portion open. So we'll see where it draws to. It may take that little volume imbalance. We do have a little 1 hour gap here, and then it should come back up to fill this. It might not do it today, but I guess we'll see. So like all these things I'm talking about, these terminology, like you're gonna have to learn what they mean and then how to see them. Because first you got to learn how to know where these bars are going, where price is going. And then you can learn when to take a trade. You know what I mean? Because if I teach you an entry to take a trade at, like, oh, get in here, that means nothing until you know where the market's going. Because you don't want to get in down here if the market's going to go up and you want to go down. So like you gotta know how to read the market first. Filled that 1 hour volume imbalance there. So if it keeps going low, all right. So now look, we filled that volume imbalance there. This was the inversion. Oh, right. Inversion fair value gap. VRSION. Fair value gap. So look, there was an inversion fair. This would actually be a nice bounce for point right here. This inversion fair value gap with this volume imbalance. This is where price should draw to, and I think this is where price should stop. I don't think we should draw any further down. And if we do, then price does keep going down. Then it probably is just going to be going for that daily gap. That's the only other thing left. And if that happens, it's just a... oh, look, here's one right here that I missed. Oh, this is a 4 hour. That's why. Here's a 4 hour gap that hasn't gotten filled. Right here. So let's see what that looks like when we drop down. 4 hour that we're hitting. So we're hitting. Yeah, I don't think we should really go down any further. Like, I think that's enough. I think it should come back up. To this high. Right here. Boom. Should come back up to here. And then maybe even more because it left this unfilled up here yesterday. But we'll see. It's still 5 minutes till 10. So this is our draw here. Where's our London? Oh, it's above London low. We'll see. So I would like to see this gap get traded through, becoming an inversion fair value gap. And like I said, if it just keeps running short, then I'm probably not going to take a trade. All the way up until 9:45-ish or so, I'm trying to frame out everything and figure out what I'm looking for. So I'm looking for a trade to go up when I say I'm looking for a long. So now we're going into that 5-minute gap. I want to see it get traded through. So we took this swing on the 1 minute. Let me actually mark this gap again real quick. It's the 5 minute. So you traded up into it. So I want to see it displace up and through. And then more than likely, like 71. I mean, I don't think I'll try to take it all the way up, but you have this high, the opening range gap low. Get rid of this one. It should probably come up to this one. I mean, it'll probably run all the way up, but would be the low-hanging fruit, which is right at the opening range gap low, London low. That'd be more so the low-hanging fruit. I want to see this gap, though, get traded through. I would love to see the 1 minute showed some displacement through and leave a gap here and then come back in and we take a long off of it, because then this would be a 5-minute inverted gap too. But we're about to get a 15-minute gap right up here as well. Right where this little gap is on the 5, that's going to be a 15-minute also here in a minute. But that's from the opening move. So I'm going to mark it. Right here. This is a 15-minute gap. Now it's 10 o'clock. I would love to see some displacement up and through. I believe this is the last run down to take out some stops here. It gets stop hunting right here. Depending on where this bar closes, if this bar closes at or above these, this right here is a stop hunt to take out all the traders that are sitting right here. The wick does the damage. Yep, see the bar closed above those bodies. So I don't think we're going short. We could, but I don't think we are. Like, I don't think price goes below this wick now. So we'll see what happens here between this area. I want to see it come up, displace through here like I just said. I don't really want to see this little gap form right here, which it's about to. And if it does form, which it is, I want to see it get inverted right away. So I'm going to mark it as an inversion fair value gap. I want to see the bodies continue to close above this line that I drew. And I want to see this come up and get inverted. Then I'll look for a long off of this to go. Okay, so now it's getting inverted. Let's see if it closes above. It's rebalanced perfectly. Let's see if it closes up and through. Because see, it rebalanced inside this wick of this this bar right here that created the gap. Right there. So rebalanced. It may go down. I need it to close up and through. So this is a crucial area. If it can close above this gap, or if it closes below this body, that'll be telling us which way it's going to go. But see, look, the bodies are now closing between this line and this gap. If we could displace up, that'd be beautiful. Talking Chinese right now? See, we keep wicking through. I need a body to close above it. I need displacement up. Write down displacement. Tell you these things to write down so I can explain them afterwards. Let's see if wicks are going to do more damage or if it's actually the body's going to close. Ooh, the body closed right there. Same level. But look, the wicks are doing all the damage. I don't want to see it take this wick, this low of this wick. Oh, it took it. It's going to keep running down. Probably going to be a no trade day for me. Because I had no setup. I have no reason for it to just, it just could be running short. I mean, so like it could keep running all the way down in this daily gap. I'll still go long if this displaces and inverts this gap. Might get a gap right here. Right now we're having a lot of accumulation going on. I was thinking this could be some manipulation down, but maybe we'll have another run down to the middle of this 4-hour gap and that be our manipulation and then distribute back up. It's very respecting this gap. This gap is, and if you look, it's in between yesterday's new day opening gap. So that's why also it's being respected, because that's the middle of yesterday's new day opening gap as well. See if I mark the new day opening gap here. Boom. Look at the middle. Is that blue line? Yeah. Boom, boom. So yeah, so we'll see. Like I said, it very well could run one manipulation leg down, hit the middle of this gap, and then look for it to run up, and that could be in the afternoon. Who knows? Could be this morning. Who knows? Just have to wait and see. There's a new 15-minute gap too, right here. But look at this. This could be the manipulation already. We'll see. Because see, this is where I marked where the body's closed. And look how many times the body's closed since then underneath this line. Just right here when it shot down past this wick. Body's closed, and ever since then it's still not closing below that line. You see that? So let's see if we get some displacement and invert this gap. I'm not really worried about these two gaps here though, because it came down on that opening move, so it needs to rebalance them. And then we have the opening range gap up here still too, and a lot of those new day opening gaps and all that. See if we get this 1 minute gap. Yep. If it closes above this inverted gap, almost. If it comes down into this gap, I'm going to go long. Still hasn't closed above that inverted gap. I'm going to go long if it comes down. Because it shouldn't come back down lower anymore. If this bar closes up, we'll get a little volume imbalance right here. I really want to see it close above this inverted gap and create an inversion gap. That'd be nice. And we might get a volume imbalance right there if this closes up. It's having a really hard time. All right, let's see. It's closing up. Yep. Now there's a volume imbalance that it just filled the volume imbalance. I really want to go long, but I'm waiting. I'm just waiting. I really wanted to go long right here when it filled this volume imbalance. But I think it's going to come back down into this. That way I can have a better entry and put my stop below here. I'll have a very small stop. So small risk, which is good. It closed right at the top of that gap, so it hasn't quite inverted it. Yeah, it did close there, and it did fill that volume imbalance, so if we do get in down here, we can target just right up here or that 15-minute. Oh, hold on. I'm in long. Put my stop right down here at this wick low. And I was going to say we could target the high of this 15-minute or this 15-minute. And I'm going to target right here because there's also a gap there on the 1 minute right here. 49. Where's my entry? 49. 50. Yeah, I'm just going to leave my stop there and see what happens. My entry's I'm trying to see where my entry is. 50. It's 32. Okay, yeah. I'm just going to leave my stop right there, see what happens. I don't think we should wick down there. It's just hesitating a little bit because of those gaps. That 15-minute and 5-minute. But I don't think it should come back down lower. And you see it wicked through, but the body's closed up here again. Body's closed here, so that's good. That's good. Price should run right up through. To it and through it. I'd love to see this gap happen here. So remember, they could fill this and then bounce around a little bit. I want to see this gap form. I want to see that one. I want to see this one form and stay open. It could dig back down into this one. I don't want to see it happen, but it could. Target filled.